In today's video, I want to show you the best ways to buy Bitcoin. I know you can just buy Bitcoin, but if you have a few strategies involved in this process, you can massively increase your total returns on your investment over time. So in today's video, I'm going to be sharing some of those strategies with you on how to best buy Bitcoin. My name's Lark. Every day I make videos talking about cryptocurrency investing. If you do like that kind of topic, you like staying up to date with what's happening in crypto, a quick tap on the thumbs up button just to let me and YouTube know that you do like this kind of content would be super freaking awesome. By the way, if you need a place to buy Bitcoin, a great place to do that is over on FTX. Use the link down below to start your FTX account and you'll get 10% off of your fees. This is especially a great option for all of the Americans in the audience. For internationals, you may want to consider using Binance. There's also a link down below for that with also a 10% fee discount. But regardless of where you buy your Bitcoin at, you have to realize it's going to be a crazy, crazy ride. Bitcoin is a volatile asset class, but as they say, the volatility is the price you pay for performance. But all that volatility gives us a lot of great opportunity within the market. And look, I am a firm believer that Bitcoin is going to $1 million plus long term, which is why I continue to stack Bitcoin, why Bitcoin is the number one cryptocurrency in my portfolio. I believe in it that much. I believe it is going to $1 million per coin. The only question is, when is that going to happen? Probably by the end of the decade, in my opinion, but of course we shall see. If it's off by a few years, it doesn't happen until 2032, well, c'est la vie, I suppose. But it is coming. But along the way, it's going to be a rocky ride. But let's get into some strategies here, just so you know that all in advance. Let's get into some strategies here about how to best maximize your returns on your Bitcoin investments. The first is by watching your fees. So this is Coinbase. This is a very popular place for people to buy cryptocurrencies and is also one of the worst places for people to buy cryptocurrencies. The two exchanges I recommended at the start of this video, FTX and Binance, both have very, very low fees. Coinbase, if you buy via Coinbase's primary broker site, you could be paying 1.49%. Now that may not sound like the craziest number in the world, but let's say you buy $10,000 worth of Bitcoin. Well, you've just paid about $150 in fees to do that. That's $150 in Bitcoin that could have been in your pocket. FTX and Binance, they both charge 0.1% or less, depending on some different factors about how much you're trading, et cetera, et cetera. But in that situation, you have to realize you just paid $140 more for your Bitcoin than you had to. That's $140 of the Bitcoin that could have been in your pocket. That's now in Coinbase's pocket. Something to think about, isn't it? Now that's just on their prime brokerage service. Coinbase, their trading application, you can actually get the fees lower to 0.5%. That's still $50 in fees on every $10,000 worth of Bitcoin bought, which again is 5 times what you'd be paying elsewhere. And again, you might not think, well, okay, Lark, it's only $50 or $149. It's really not that big of a deal because Bitcoin's going to go to the moon. Exactly, Bitcoin's going to go to the moon. Let's say that you buy it for a 1.49% fee and Bitcoin ends up going to $1 million per coin. Well, guess what? You just missed out on $3,000 worth of gains. That 20x that happened to the Bitcoin, you missed out on that because you gave $140 worth of Bitcoin to Coinbase by paying their higher fees. So watch out for your fees. I'm not just picking on Coinbase. There are places where you'll pay higher fees. And there are all kinds of rates in between the lower rate exchanges like FTX or Binance and the Coinbases and others of the world. So just watch that fee situation. It may not seem like it much at first, but man, it really adds up over time. and you want to stack as many sats as possible into your wallet. Next, let's talk about dollar cost averaging. Super, super important in crypto to understand the power of dollar cost averaging. Here's a little something for you. If you had invested $100 a week, every Friday you get paid, it doesn't matter how expensive Bitcoin is on that day, you just take it and buy Bitcoin, $100. If you had been doing that for the last year, guess where you would be right now? You would be in profit. You'd be about 18.5% in profit right now. That includes buying the top at 65,000. That includes buying the top at 42,000, I guess, back in February sometime. I think it was around 40,000 then. Buying the top at 69,000. You bought all the tops. And guess what? You're 18.5% in profit because you were dollar cost averaging. You're taking the long perspective here on Bitcoin. You're stacking up the sats. You're slowly accumulating your position. It's a pretty powerful thing to do. Just doing regular automated buys of Bitcoin. Tax yourself. Every week when you get paid, maybe it's not $100, maybe it's $50 or $20 or $200, whatever your number might be. Automate that. Get that going straight to an exchange account where you are going to buy some Bitcoin. That way you're always averaging in. The mistake that most people make in the market, they wait until the tops come in and they buy the tops, and then they panic sell the bottoms, and then they come back and they buy the next top and they panic sell the next bottom. That is the complete opposite way that winning is done. Dollar cost averaging is one of the absolute most simple, foolproof methods for investing in Bitcoin. It's $100 a week. There you go. 18.4% gains over the last year. All the top buyers down massively. Something to think about, right? While dollar cost averaging may be the most simple and foolproof method for buying Bitcoin, it's not the only way to try to increase your crypto stack over time. Another way, of course, is by using some different technical analysis tricks. And look, this is a very deep topic, but let's just keep it super, super simple as an example. You only buy Bitcoin when it's trading under the 200-day moving average. So if we look back on our last year, right? So we look back all the way over here. That means that we would not have bought any of these tops here, nor would we have bought these tops here. We would have only been buying here in this range under $40,000. So that's when we're cost averaging in this time here. And we are, of course, buying currently because we're still trading under the 200-day moving average at the moment. So you would have had fewer buying opportunities throughout the year, but those buying opportunities long term will probably bring in more profits as you were able to buy at a lower price. So when we're trading under the 200-day moving average, as an example, that tends to be a time when the price is really, really down in the market, obviously, because it means we're under the trending price averages. So it's a good time to buy. So that's, trying to time the market. And look, obviously there is problems to that, because if you had been back here in May 2020, waiting for the price of Bitcoin to come back under the 200-day moving average, well, you would have been sidelined for a very, very, very long time and missed out on an incredible amount of gains. And if you had simply been buying $100 every single week, you would have captured this entire move up. Big difference, right? In a similar vein, you can use the Crypto Fear and Greed Index and only buy, for example, when it's under the 50 mark, when we're in times of extreme fear. The lower the better. If you get, single digit fear or fear under 20, that's a great time to buy. It's a great time to buy. Similar to using the 200-day moving average, these tend to line up actually pretty well. When the price is trading under the 200-day moving average, we usually have extreme fear also, but it's just another indicator that you can use to think about when to buy. Now we have bought our Bitcoin. So we kept our fees low. We dollar cost averaged in. Now what? Well, you don't really want to keep your crypto sitting on an exchange or a centralized service unless there's a way that you can earn money on that. So if you don't want to earn any interest on your crypto, get yourself a hardware wallet and just store it away. Be done with it and wait. That's all you got to do. You can actually keep it really, really, really simple in crypto. You don't want to leave your crypto sitting on like a hot wallet or, on a wallet on your phone or something like that. Using a device like this, it really is the best security solution the average person can have for storing their Bitcoin. But if you do want to put it to work, well, you might want to consider using a service like Celsius. And look, Celsius is not the only lender out there. There's lots of other lenders like Nexo and Crypto.com. They all have their pros and cons, right? The other guys require Crypto.com and Nexo as an example. You have to have certain percentages of their tokens in order to get good rates. Celsius, they give you bonuses if you take payments in their tokens, but they actually have pretty good rates anyway. So it's 6.2% on your first, I think, half Bitcoin or quarter Bitcoin, and then 3.5% after that. You might think, well, Lark, 3.5%, that's really not that much. Yeah, it's not a huge amount. It's not a huge amount. But you have to think, if you're holding that Bitcoin for 10 years, as an example, it's paid out in Bitcoin, by the way. That 3.5% is paid out in Bitcoin. So let's say you're cost averaging in and you're holding that Bitcoin for 10 years. Well, after 10 years, you are going to have approximately 50% more Bitcoin if you were lending out your Bitcoin that entire time. That makes a pretty damn big difference in the grand scheme of things, having 50% more Bitcoin than you would have had you not been lending. Obviously, there's risks, which is why, you may want to consider not doing it. But then there's a reward, which is why you may want to consider doing it. Personally, I use Celsius as well as a few other ways to earn interest on my Bitcoin. It's pretty nice. I like getting the weekly payouts personally, but that's a conversation you need to have with yourself, whether or not you think it's a risk reward that you're willing to take. But if you do want to sign up to Celsius, you can use the link down below for a $50 Bitcoin bonus when doing that. But look, long story short, buying Bitcoin, holding it for the long term, it's a pretty simple process. But there are ways to do it better, and I hope that this video has helped you get a few ideas about how you can stack some more sats for the long term. Thanks so much for watching today's video, and peace out till next time.